All right, hello everybody. Welcome to the Lion Investor. We are here to give you our 2023 forecast. We did pretty well in our 22 forecast, but let's see if we can do better this year. How's that sound?
I think it sounds great.
So here's what we got. We got economic and debt forecast. We got a financial forecast, and then also just sort of like some information on what investors should do. Sounds good?
Sure. Yeah, I'm going to add a couple of reflections on 22 and 23 as well.
Perfect. I think
Looking back and then looking forward.
perfect. I think the listeners will love it. So
Perfect.
let's talk about Jeremy Siegel. First thing is like he says, when everyone is on one side, they're usually wrong. So I think that happens. Like everyone expecting a recession, everyone expecting a bear market, a bull market. It just doesn't play out the way anyone really.
Right.
The future is hard to predict. So I actually am on the side this year on our economic outlook of a little more pessimistic. Last year I wasn't as pessimistic. This year I'm a little bit more. Although Jim Bullard from the St. Louis Fed said today they're looking at maybe more of a soft landing, I think it's going to be more of a hard landing for 2023.
Anybody's guess.
Anybody's
I'm not going to
guess.
make any forecasts on that, but I know the economist in you, it's something we got to do.
Well, I think what I would do is I'm letting the numbers help me on this. I'm
Okay.
letting the numbers. I've got here like 7 economic indicators, and 5 of the 7 are negative. And really, if you look, the only thing that's kind of propping us up is oil, which we've got problems with production here in the United States, and then also the war in Ukraine, and the job market. If the job market was out, I mean, you've got manufacturing in a recession, you've got consumer sentiment in the tank, housing starts in the tank,
Well, that's
money
interesting.
growth.
Those are good numbers for
Money
everybody to
growth.
see.
Yeah, and the yield curve is the most negative it's been since 1970 in the 70s. So those are some difficult,
Headwinds, right?
Yeah, headwinds.
Yeah.
We got about 15, depends on which month it is, 15 to 20 states, U.S. states in recession right now. So once you get over 25 states, that's kind of a threshold, right? That tells you that, it's quite
You
likely.
got to wonder. I mean, maybe because we're down some already, right, from last year.
Yeah.
And I don't know where we're at. We might be break even this year. I haven't paid that much attention to whether I know we were up and then now we're starting to go back down. But I mean, the markets are forward looking. So at what point does the market look beyond this?
Right.
What's your thoughts on that?
Well, that's a good question. I think that they're forward looking to the point which they're forecasting as well. I
Yeah.
mean, it's uncertain.
We'll see.
The
right?
cone of uncertainty goes like this. It's like the standard deviation just keeps growing. And I think one of the main reasons we'll have a recession this year and probably the second half is because of this very sharp quantitative tightening and this increase in interest rates up to 4.5%. And that's the fastest ever been raised. So I know the Fed was behind, but
They made up for it quickly.
they made up for it quickly. Okay. The prediction number 2, you ready?
Yes.
Inflation will moderate down. We've passed peak inflation. We were at 9.1 down to 6.5 today, and probably by the end of the year, 4%. So that's good news, right?
It is.
So that's good news. And we talked a little bit before about like shipping and supply chains are starting to heal. Here's a graph here on shipping costs. It 10x and now it's back down to to where it was prior to the
Right.
shutdown. So things are starting to loosen up out
Get
there on
those
costs.
chips again.
Okay, prediction number 3 on interest rates. I believe, and not that we know for sure, that the Federal Reserve is going to once again be proven inaccurate or wrong on their talk right now. They're going to have to eat their words, right? Remember, they ate their words on transitory, they ate their words
Right.
on this and that. They've been saying if you look at their dot plot, that interest rates are not going to go down this year, but I think they are. I think that recession is going to force them to go down. And don't listen to me. Listen to the 2-year bond market. The 2-year bond market,
Yeah, you look at the yields.
the yields are way down, 4.6 all the way down to 4.2. So that's definitely the 2 years telling the Fed, hey, we're going to see a declining interest rate here in the future. So that's actually okay news. Prediction number 4. What do you think is going to happen to the national debt, Mike?
I'd like to be an optimist, but I don't see the national debt going down anytime soon.
Yeah, and that's what I predict, that the national debt will hit 33 trillion, and that comes from just the surplus, the deficit. The deficit is going to be about 1.5, 1.6 trillion this year, and the debt ceiling, my friends, we just hit it yesterday. 31.4 trillion. I mean, in my lifetime, I think your lifetime are the
Oh, you gotta
debt
use the old
ceiling.
guy.
Yeah, it's raised 80 times.
Yeah,
Yeah.
yeah.
So you know why the debt ceiling was put in place, right, Mike?
I do not.
Just to Congress to like put like a limit or like a check on their spending, right? And so
Well, obviously, if we
It's not
continue to
working?
see it, it's not much of a check system. But yeah, okay,
yeah.
great.
So do you know how they're funding the national government right now?
You know, I'd heard something in the news, but I didn't pay any attention to it. How are they doing?
They're taking pension money away. They're taking the pension money from Social Security administrators and
Yeah.
government workers are using that, and they can get through all the way till June, I think. But my other prediction on that is expect a very fiery, not an easy fix. I think this one's gonna be drawn out. McCarthy from California, the new
Right.
Speaker of the House. I think remember that whole week long.
right.
The negotiation was to stick it to the debt ceiling. So look for, ladies and gentlemen, a tough time politically on this debt ceiling. Okay, a couple more on economics, and we'll turn over to Mike.
Okay.
Interest rates falling. I think that bonds are going to have a good positive year this year, and the dollar should weaken. Right. So the 60-40 portfolio last year, Mike,
Right.
you might know this one. That was the worst year ever in the 60-40
Right.
portfolio because stocks were down and bonds were down. This year, bonds are going to be up, and we don't know about stocks. I could be wrong on bonds.
Yeah,
but
we'll find out. This is
we'll
your
find
predictions.
out.
We're going to rewind the tape in a year, and we'll see where we.
Yeah.
you are.
I feel good about
I'm
it
not
now.
making any predictions, so we're telling you, buddy.
I feel good about it now, but just hang in there at the end of the year. I think this prediction is going to come true as well. Game theory. Prediction
Yeah.
number 6, the Russian-Ukraine war will escalate. And in a bad way. I'm sorry, it's kind of another
That's
bad
sad.
one. There's a picture of Vladimir Putin. If he loses, what happens to him? He's dead. And his money's gone, right?
Right.
So he cannot lose.
Right.
And the West, can they let this precedent of aggression stand?
No.
No. So it's going to escalate. And I think we will see that with the tanks coming in, right?
It's sad state of affairs.
Yeah, sad state of affairs. So let's talk a little bit about financial outlook, huh? Get a little bit Mike in here. The prediction number 7 is we're going to have a reversion to the mean that's just always there. U.S. equities outperformed over the last many years, and we still are at somewhat elevated ratios with regards to like the CAPE ratio or the Shiller ratio that kind of averages a 10-year. It's quite possible that over the next 5, we don't know what the stock market's going to do this year or next year because it's so challenging to predict the short run. But in the long run, we know we're going to go up. But we do also know that we still are in overvaluation territory, right, Mike?
Correct.
So Vanguard does we have our own proprietary stuff here
Right.
at the
Similar.
office. We're not going to share that. But what we will share is Vanguard's, they publish this, their asset class performance. They're looking at depressed equities over the 10-year period. Global equities, because they've lagged over the last 10 years to have more of a stronger return. Emerging markets to have a little stronger return than the U.S. equities. And then the bond market, look at that, Mike, over the next 10 years, 4.1 to 5%. So it might be an okay time to get back into bonds if you had shifted away. It might be time just to, it's better not to shift on these things.
Thank you.
Yeah, it's better not to shift.
Evaluate what your plan is first and then set it.
But this time,
the shifting thing
the
doesn't
bonds
work
be all
well.
right. So what's any other thoughts you had on
Well, I think a lot of
asset
people.
class returns?
I mean, that's the thing is a lot of people are avoid international equities just because they have that home country bias, and
Sure.
especially when you've had the last decade of underperforming the U.S. market, it's hard for people now to just all of a sudden decide, well, I should be more diversified. I ought to have some international, but it probably in the next decade's looking to their favor, even just for no other measure. Forget about the valuations like you just discussed. If you just talk about reversion to the mean, it's well below the mean. If it reverts to the mean, you're going to have higher returns there and lower here in the U.S.
Yeah, and also maybe you could, what's the difference between like technology versus like value stocks, Mike?
Well, that's a good point too, because we could break up the U.S. equities. I mean, the U.S. equities, that's the greater market, which is tech heavy and growth weighted, right?
Mm-hmm.
And that's done really well for the last decade plus, and starting to give up ground, which I'm going to kind of talk about as well a little bit. And so it should bode well for value and probably small as well.
Yep. So kind of
Over
right up
large
our
and growth.
3-factor investing model.
So just about being well diversified in the end.
Yep.
Right. Yeah.
Absolutely. So thank you, Bert and Malchio, for that one. And then kind of like our prediction number 8 is our investing strategy. We're going to kind of go with the odds this year. We don't know because year to year we don't know, but over a long period we know we're betting on the economy. I think this year, even though we might have a little recession, that who knows, we might be up year. And one of the things we talk about is after a down year. Could you talk about like what consumers should expect?
You're getting into my party here now.
Yeah, go ahead, party on.
Well, it was interesting because you talked about 60-40. And
Yeah.
I got this data from Dimensional here just recent. I'll have Ryan throw up some charts in this as well. But they showed historically in years where the 60-40 allocation as a model for a portfolio since 26, where you've had a decline of 10%. Going forward, the returns have been strong, and they've been for the next 12 months, it was almost 8%. 3 years, it was 17%, and 5 years, it was 37%.
And I want to get on that bandwagon.
Maybe it doesn't happen beginning of this year and we get the recession, but things are looking better forward-looking for equity-based portfolios.
Mm-hmm.
Yeah. And it wasn't a good year. I mean, you think about last year for FANG stocks. I mean, huge loss for FANG last year. FANG is Facebook, Apple, Amazon, Netflix, Google.
Yeah.
Okay, and they represent a huge part. If you're looking like the S&P 500 index, they were at one point like 27% or something.
20, yeah. Mm-hmm.
And they had a combined loss of $3.2 trillion last year. And compare that, they underperformed the Russell 3000, which is a general index of the U.S. market, by 20%. And we can throw up a couple slides up there. And that was after a great decade, though. They did 28% a year for a decade ending in 21. I mean, they knocked it out of the park. Which is why you're going to end up getting reversion to the mean.
I almost said it before you did.
Yeah. Yeah. Okay. What else you got?
So then at the end, what we have is I don't know if you want to say anything more on some of your, we have some lighthearted predictions. You want to go through those?
We're going to have the open house again. Okay, yeah.
I just want to party.
I think we are. We're going to do the you want to party.
I want to party. Is that all right? I want to
We're
have
having
some
an
food.
open house this year.
People like food, buddy.
I know.
I did a lighthearted prediction at my church, and I said, we will have a potluck. I mean,
we'll do something. I think we have to do a barbecue.
Yeah, barbecue right out here in the back.
We need a little guy with a guitar, though.
Oh, yeah. We could have Ryan perform.
Our producer? I don't know if he's ready for that, but we'll get somebody.
He's talented.
He's ready.
He's ready. So I think, our lighthearted predictions.
Yes. All right, Bradley basketball.
Let's have a party, and let's party at the basketball game, too.
Great.
My daughter's working the games. She's doing the 50-50 tickets at the Carver Arena and having fun.
Can I tell you I used to work basketball games?
Doing what?
This was many years ago, Pekin High School, and back in my days when I was in the insurance business, Mungie Crouch Mahoney. I came up with the idea of getting T-shirts printed up with our logo, and they had a really good three-point shooter back then, and we had this big rubber band thing, and we would shoot the rubber slingshot.
Oh, slingshot.
Slingshot.
Yeah.
And shoot them up into the stands every time they made a three-pointer.
Oh, fun.
Yeah.
Nice. And did you get a lot of clients from that? Those T-shirts?
Probably not.
We had fun, right?
Probably embarrassed myself, but I had some fun.
Yeah, cool.
Yeah.
Well, one last prediction, and you can help us with this. Make sure you hit the like and subscribe because we're going to try to get 200
we'll get some
subscribers.
good content out this year, and hopefully everybody finds it beneficial.
Yeah, this is good stuff going on right here in Peoria Heights, Illinois, and very academic-based investing. I hope you guys enjoy it. And
just the truth.
Yeah, that's right.
And the data, right?
And just the data, right?
Data.
So, folks, you have a good day, and we're glad to give you this prediction, and we'll see you next time. Take care.